I recently passed a 200k verification with FTMO trading only gold, and I'm about to break down with you the entries that passed the challenge and the verification and all of the very simplistic and repeatable higher time frame technical reasons behind the trade ideas. Right, so let's jump into the chart. Basically, first of all, gold. Why gold? Well, this is the daily time frame, and we can zoom out and we can see that even we can go back to as far as October 2022, and right now it's February 2025. We've been on a significant bull run. Actually, overall, macro is bullish, even longer as far as 2017 and beyond. So we know that it's a very heavily trending asset, and the trend is your friend. If you can find a trending market, your trading will already increase massively. Second of all, we can see inside this consolidation period, which I'll draw on for you now, this is a consolidation because price took the high, took the low, failed to create highs, failed to create lows. It's moving sideways. It's a consolidation, right? Or a correction, some of you might call it. But inside this period, that was not really tradable. I didn't actually touch gold for a good month over December, but when it ran down into these daily lows, mid-December, we had a daily run on sell side liquidity. And those of you that have been following me for a while know that I'm very heavy on higher time frame liquidity and trend. Lots of people ask me, what strategy do I trade? It doesn't have a name. I don't trade fancy stuff like ICT and inverted fair value gaps and SMT divergence and all this complicated nonsense. I just find a trend, wait for higher time frame liquidity, pick a higher time frame target, and choose a medium to low time frame like the 5 or the 15 minute to look for entry and hold it for 3 to 4 days typically. You need to just keep things really simple. So we had a run on daily liquidity. I also use for gold only the 50 moving average, which you can see price had pressed into. And we can also look at the daily consolidation itself. The most recent daily swing high and low had multiple times ran in to liquidity again. So we had external range liquidity here taken around the 12th of November, and then internal range daily liquidity, which was ran around the 18th of December. Now it's inside this area that I'm circling that I now want to drop down to the 4 hour to identify a market structure shift, because when we are seeing daily lower prices, the 4 hour will be bearish, right? Now, for me to want to start buying, I at least want the 4 hour to be bullish. I'm not too interested if the 15 minute is bearish after that, because I know that the 4 hour is king over the 15 minute and anything lower than that. So I will use my 4 hour as the key driver. We also have this higher time frame target as well, and if it's going to reach that in a trending manner, which it likely will, following suit from previous data, it will continue trading further. So let's jump down to the 4 hour and have a look just after that daily internal run on liquidity, which you can see here. I'm going to remove this circle now so we can see properly and zoom in. Now, you're probably here because you've seen one of my videos before, but if you haven't, I use ranges. I basically just get a GAN box and I have 0 and 1 because it allows me to draw a high and a low of a range. What do I mean by a range? So if we're having a low, a high, low, high, low, high, low, the most recent high and low forms the range. So redrawing this 4 hour dealing range back in, because we can see that the 4 hour was printing lower lows and lower highs until this point. Now, what I want is a market structure shift, which means high highs and high lows to the upside. Now, at least one of, ideally a second break. A second higher high creates a new bullish trend. A second lower low creates a new bearish trend. But if you're aggressive enough, if you're confident enough, and if you've got higher time frame additional confluences, such as a daily macro bullish market, daily external range liquidity sweep, daily internal range liquidity sweep, 50 moving average on the 4 hour and daily tapping into and respecting, you can then consider one break. Now you can see that there was opportunity between the beginning of January, so like the 2nd, 3rd of January, all the way up to my first trade on this FTMO account, which was the 27th of Jan. So almost an entire month where the 4 hour was simply creating higher highs, 5 higher highs, and after breaking those highs, higher lows. Break of structure, break of structure, break of structure, right. So we have all of that, right? So a really nice bullish trend. And I was simply continuing that thesis, anticipating that price was going to continue. Now, like I say, the first trade I took on the FTMO challenge, the phase 1 of the 200K, was actually a -1, right? And I'm going to run through this. Now, some of these are 15-minute entries, which is 90% of my bread and butter. I usually like to use the daily for directional bias, liquidity and trend, 4 hour for confirmation of the daily liquidity and trend, and then the 15 for time frame alignment with conjunction with the 4 hour daily, and then entry on that 15-minute, targeting either 15-minute, 4 hour or daily highs. If we are trading beyond that, then I'll usually go for a 4-to-1, 5-to-1. I'll trail my stop, or if I'm close to passing a phase 1 or phase 2 in a challenge, then I'll look to aim for my profit targets, of course. So it depends on what account I'm trading, right? Let's have a look in this area first of all, because this is really key. Now remember, this is the 4 hour chart. So we have a 4 hour low and a 4 hour high. Notice I'm drawing a range on. What does price do when it comes in? So it takes the low, liquidity resting below, it also taps into the 50 moving average, and it also, nature of price, which I say quite often, is it reacts instantly. So the 4 hour get a bullish retrace, NFT to the downside, no follow through. So we have 1, 2, and then a doji, 3, 4 bullish 4 hour candles right after that, right? Now the reason I didn't enter this immediately is just thought process behind what I did day to day, but I was looking to continue this because the high had not yet been reached. So what I'm going to do now, I'm going to jump down to the 15-minute. I'll just bar replay here so I don't have to zoom in too much. And let's drop down to the 15-minute where it makes more sense. Now this first trade was a 1-minute entry, and I'll explain why. Like I said earlier, first of all, daily is bullish. Ticked off, only looking for buys. 4 hour has been bullish for almost 5 trading weeks. Tick it off, only looking for buys. We have a 4 hour external range low liquidity sweep. Tick it off. Prime area for buys. Now the actual sweep itself was outside of kill zone. It was quite late New York, and there was a really nice London trade which I missed, right? This one right here was a really nice trade based on 4 hour liquidity sweep where I don't need 15 minutes to be bullish. We can see it's creating lower lows and lower highs, right? And then this is really external of this last 15-minute range. You probably have a high here, right? So this would be internal range. But I don't really care too much about the 15-minute, whether it's creating higher highs or higher lows. If the daily and the 4 hour are both bullish, and we have, again, further confluences, reasonings behind higher prices, such as 4 hour liquidity, timing, of course, and the moving average on gold. I don't use the moving average on indices, by the way. But we do have here an internal liquidity sweep, which is also Asia session right here, gets taken out, bullish candle, and then I missed out on that trade, right? We can't take them all, happens. But then New York, which is what I'm also favoring, by the way, with gold. I did take 2 London session trades, but if I can help it, I'd rather trade New York with gold, but it works on both sessions. Now here we can see we broke out of this 15-minute consolidation. I'm going to draw on that liquidity sweep, 15-minute liquidity taken, and then this high gets broken as well to the upside. Now this move here is rather impulsive. So if I'm looking to get involved and we only have, let's say, 30, 45, maybe 60 minutes left of the day, as in New York session, and I want to get involved, bear in mind there is a higher time frame target up here to the left. right? Which price has not met yet after a 4-hour liquidity sweep. So it's very likely that price is going to get to this level. Of course, this trade becomes stop hunted, right? Get taken out, but then we re-enter and then it plays out the second time, but we'll get to that. So if time is running out, essentially on the 15-minute, we are not going to get the 15-minute create a high, a low, another high, and then a low taking liquidity with a retrace in order for me to get involved. That's going to take at least 90 to 120 minutes, right? A few hours. So if I know that I have confidence in higher prices, I want to get involved, but the likeliness of me getting the 15-minute liquidity entry is very slim to none, then of course I've got no choice but to refine down. If we go down to the 5-minute, we also on the 5-minute do not have any liquidity other than this low in here. So I am anticipating that price is not going to come back to take liquidity into there, although of course I'm not always right, no one ever is, and price could have easily done that, but I'm willing to take the risk. We had that volatility injection between London and New York, and I'm expecting it to continue. So I drop down further to the 1-minute. And it's actually really quite rare for me to go as low as the 1-minute. Less than 5% of my trades are taken on the 1-minute, but this is the reason behind why I would refine my time frames and drop lower if I have confidence in a trade direction at a specific time and don't have the 5 or 15-minute confluences for that particular entry. Now what we have here is a higher high, we have a higher low, we have another higher high, and all I'm looking for on the entry time frame is liquidity, which we get inside here. So any of these bullish candles we can enter from. Market execution stop is way down here below the session, and also giving some breathing space below this low in case price comes back to take me out for this. But of course what happens is price moves to about 1-to-1 and then comes back and takes me out. There was no risk off on this trade, so that is a -1. So I've now got to make 11% on the challenge to pass, right? So that leads me to the very next day. Now the very next day, simply, we have a 4-hour range, and we still have reasoning behind higher prices, right? So all I'm looking for is ideally during New York, a run on lows, run on liquidity, a retrace candle, and for me to get involved, because I'm not letting this losing trade put me off the idea that these highs are going next. So I waited for London. London and Asia were very sideways. They just consolidated sideways anyway, as you can see. Didn't do anything. And then it created a lower low, a lower high. The lower low becomes liquidity. That's the target I'm seeking. And it runs into that and we get that retrace candle, that bullish retrace candle. Now, I have a good stop loss, giving myself breathing space, which is, this is exactly the reason why we don't choke the trades. This could have easily have taken me out if I had, you know, a slightly tighter stop loss on this, but I didn't. And looking to the left, I could have even gone a bit deeper with this under these lows here, but I'm thinking that thought process at the time, if it's going to go much lower than that, then it's probably going to come lower and take me out anyway. So just one of those things, the market isn't perfect. Sometimes you'll be right, sometimes you'll be wrong. And this was enough breathing space for me, and price went and hit my profit target for, on this one, 5.6. Now, the reason this was 5.6 is because I was actually in a second position, which both combined made up for the loss and hit the profit target. Right? Now, this was a 15-minute entry, as you can see, so we don't need to refine down to any lower time frame. I'll just remove that and put this 15-minute run on liquidity right here to show that entry, right? So the next day we break out of this 4-hour range. We actually take these highs as well, and in a very impulsive nature from Thursday morning up until New York, we are very impulsive. Now, this is quite a risky entry, trading longs at a 4-hour high. But again, if I come back to a higher time frame, you've always got to refer to the time frame above and go, okay, well, what am I expecting? What am I expecting price to do? This is external range, it's not internal range, right? So I am expecting price to continue higher. It's also been trending for around 6 weeks at that point. So I'm expecting the trend to continue. So let's drop back down to the 15-minute. Actually, let's have a quick look at the 4-hour. We just want to make sure if we've got any more 4-hour liquidity sweeps. So we had this 4-hour liquidity sweep, we had a break of structure, and then we're simply having higher highs and higher lows at that point. So we've also had a very recent 4-hour run on liquidity. So we don't expect to have another one within a few days, not within that same week, right? We've had a run on 4-hour liquidity here. We don't expect it again, likely even that week, not in a very trending market. Now this one, very similar in terms of choosing a time frame for entry, very similar to the first position. So just because the first one lost doesn't mean, oh, the entry model sucks, it doesn't work, right? Let's change strategies. No, it's just, it was the market wasn't perfect, right? This could have easily have gone on and made me 5-6%. Same exact entry model, very impulsive nature during London and into New York. And even though this was early New York, I'm still on the anticipation that we've got volatility in the market, and I'm probably not expecting that price is going to create a higher high, a higher low, another higher high, and then a sweep of liquidity on the 15-minute time frame. So I'm going to be really, hot on my toes, refining down to the 5-minute, 1 minute if I need to, but I actually don't go down to the 1 minute again after that. Like I say, it's less than 5% of my trades are lower than a 5-minute, and 90% are 15. The rest of the trades here are 5-minute and 15-minute entries. Now let's come back and have a look at this entry on the 5-minute, because we don't get that liquidity sweep, of course, on the 15, and I'm anticipating the likeliness of price not developing a 15-minute liquidity sweep. You won't know. Everything we do in trading is anticipation, right? So we get a low, a high, price comes back, takes that low with liquidity to fuel the next move up. Retrace candle, stops below the previous low, and pretty much straight away, zero drawdown on that trade, and we're now in 2 trades. We leave that to run, and once both of these trades hit these levels, the challenge, the first phase, is complete. Then we're waiting for the second phase. So didn't trade for a day, we wait for the credentials to be released, and then we're inside of here. So we're waiting for the next area to trade. Let's come back to the 4-hour. Verification begins. All we're getting, again, we're getting a break of structure, a higher high. This is the low down here. New range. We're anticipating that this is going to be a higher low, and price will create another higher high. There's no inducement in here. There's no lows to use as liquidity, just like this one did, right? Liquidity drives the move higher. There's none of that, and we don't need it because we've only just recently taken liquidity on the 4-hour, remember? So on the assumption that price is less likely to come back to take more 4-hour liquidity, we can be semi-aggressive on the 15-minute and just look simply for continuations. So let's drop back down to the 15-minute. Let's have a look what time frame this was taken on. Yeah, this was taken on the 5-minute, and this one trade actually passed my verification, and I'll show you one more trade as well as a bonus on here. So what price is doing here is it's taking out this 15-minute swing range. Asia manipulates the lows, takes liquidity resting below the previous trading days, and then very quickly shifts back bullish again. Again, I don't need the 15-minute time frame to align bullish in a very heavily bullish 4-hour market. 4-hour is the key driver. 4-hour is king. I say that almost every single day to my community, to my mentees, and that's exactly what gives them clarity in their trading more than anything else. The entry, you don't have to be that precise, right? You've just got to get your higher time frame and your directional bias correct. But it takes the high, it consolidates. I'm not expecting this to be a liquidity sweep and then drive price lower, because we are higher time frame in a bullish market, not a bearish market. Now this is a London session trade. And it's a 5-minute entry because, again, I'm not anticipating that price on the 15-minute is going to create liquidity. You can see a low inside of here, which I'll mark on. And this trade is also towards the very end of the session, which again gives more feedback to the whole theory of we're unlikely to get 15-minute liquidity here, but it's looking really good. We've had a shift bullish potentially. 4 hours still bullish. We've only just recently taken 4-hour liquidity, so we're not going to need to wait for that again. We can be more aggressive and we can potentially pass this verification sooner than later. So very, very straightforward. Just look how clear the 5-minute looks. We have impulsive drive, we have a higher high, we have a low, we have a second higher high. This low on the 5-minute is very clearly liquidity. Price comes back into this area and it's just outside of London session, but we keep that, or I market execute on there, or you could keep your buy stop order on there, and price tags in, and very quickly, even before New York's even really begun, is straight into profit target. All right, so right, let's come back down to the 15-minute, and I want to show you one more bonus trade that I actually took on a second 200k FTMO challenge, which I did pass last week as well. This is the first trade I took on it, and this showcases again the power of 15-minute ranges. A very bullish 15-minute range. We've got high high, higher low. This is all internal. Price is simply consolidating, moving sideways. You can be very rough with your ranges. You don't need to be super accurate, but you can see what happens. We have a run on, what is this? Opening range, initial balance, Asia lows, consolidation, sell side liquidity. It's all the same thing, right? You just got to look at this and go, okay, am I bullish? Yes. Is it pierced the 50 moving average? Yes. We don't need 4-hour liquidity. No, we've been buying this trending market that's been trending for 6 weeks now. Is it likely to go lower or is it more likely to go higher? Well, it's a bullish trending market. Let's keep buying. Okay, great. We wait for session, we wait for liquidity, we wait for retrace candle, and we get involved. So there are numerous opportunities to get involved in here. Price actually comes back once, twice. So if you miss this, if you're at work or if you're driving or if you're taking a phone call or if you're taking your kids to school, these things happen. And I did this last week. Actually, it was yesterday. I did this yesterday where I took my son to school and I missed a trade that I was waiting for. So I set myself a buy limit, price came back, tagged me in, and off it went. You could do the same thing with this. Like I say, the entry you don't have to be that accurate with. It's more about directional bias, timing, and stop loss placement, of course. Now, there isn't any other further areas for stop loss protection to the left. So just giving a bit of buffer room on this, and price then goes in your favor, moving risk off the table, ideally once price breaks these 15-minute highs and onto profit target. So if you want to learn exactly how this system works and how it differs from gold into indices such as the S&P 500 and the German DAX, which I also trade as well, and how to get results like my students are on screen now, there will be a link in the description below where you can apply to work with me one-on-one. Spaces are full right now, but I'm taking on clients ready for March, which is a 12-week program. This is not a busy Discord community. This is a one-to-one mentorship that's sole purpose is to get you confident, skillful enough, consistent, profitable, and then funded in that 12-week window. If you're just here to watch the free content, leave a comment, let me know what you've learned and what you like the most about the video and some content ideas on future videos, and I will see you on the next one.